Hello guys, welcome back to my channel. Here I am with the accounting equation simple version for the beginners to the accounts, that what is actually accounting equation and what's its role when we do particular statement, like we say that assets is equals to liability plus capital. How it actually works for business and what is actually the applicability here, we will be discussing about the same in a simplified form. Let's say if I say there is a one person who is coming from the village to the town, he knows that basic chart, he knows how to prepare, he knows that Golgappa chart, how he has to prepare. See, he wants to start his own ready of the Golgappas here. Fine. When he wants to go along for a ready, he would need particular base, that is ready itself, that we call a cart, and on that he needs the material. But he is having confidence in himself that once he start doing the business, he will be into a good earning. But the issue is this, that in his pocket he is having only rupees 1000 to make investment into the business. When I say that he is having in his pocket 1000 rupees, that means he wants to invest rupees 1000 cash into the business. Now, one of his friends helped him to getting arranged for the ready on the, you can say, installment basis, loan basis. Let he manage him to get a particular stall or a ready or a card for a rupees of, let's say, 50,000 over here. Now, the total investment in the business, what would be 1000 cash which he brought into the business, and along with that loan of there, if he has purchased a card with that, that is rupees 50,000. So the total assets in the business are 51,000, and here 51,000, out of which 50,000 is loan and 1,000 is only his investment. Now in the second version, if I say that out of 1000 he spends rupees 800 in buying the stock, whatever atta, suji he requires for, or potatoes or whatever things, masalas, all he needs to cook his preparations over there, that would become the stock. He purchased a stock of rupees 800, spending 800 from cash. No change on his cart is there, no change on the loan is there, no change in the capital is there. Fine. So after making this much investment, now customers are visiting to him, and when customers are visiting, the whole of the stock which he has prepared is sold out, because he is preparing in a delicious manner. So that's why whole of the stock is sold out. This 800 rupees stock he is going to spend, sorry, on from this is rupees here 2000. Supposing it to be, after selling the stock of rupees 800, he is getting a cash of rupees 2000. Now no change on the cart itself, no change in the loan itself. He made a profit of rupees, what was his day's profit here is rupees 1200. So this 1200 would be added over here. Now when he has earned rupees 1200, let's suppose he goes back to the loan giver and make a payment of rupees, let's suppose here he is making again a payment of rupees 1000, let's suppose. If he is making loan payment of 1000 here, so how much is going from here? 1000. Cash is reducing with 1000. Loan amount is also paid with 1000. So 1000 is going in the loan payment. No change on the card investment over here. No change in the stock here. And no change in his capital investment here. After that, what happens? He again on the next very day, for the stock to be maintained, he bought. Now here let's see how much cash firstly he is holding. He is having total 3000 minus 1800, 1200. Let's suppose he spends 1000 to buy the stock. So now he is buying a stock of rupees 1000. No change in the cart value, no change in the loan value, no change in the capital right? Then during the whole day he is sending whatever preparations he is making. At the end of the day, with this 1000 stock selling, let's say he earns rupees 3500. Now he knows how to make business. So out of this 1000 stock, he actually made up 3500 rupees in cash, and there is no change in this value, no change in the loan. How much profit actually he generated over here? That is rupees 2500 profit he generated. Now again from 2500, let's suppose he makes a payment for the loan, supposing it to be he uses rupees 2000 here. If he uses 2000, the loan value would reduce with 2000, and from your cash again 2000 rupees would be deducted. No change here, no change here, and again it goes with the no change here. That is how your accounting equation works. How it works, that your debit and credit should always stay equals to each other. Like over here, when I am deducting 800, I am adding 800 to no change here and no change here. When I am making a variation of 1200 in positive here, same 1200 have been added here. So both asset and liability have been changed with rupees 1200. Here no change. Here I have given a deduction of 1000, so liability also got reduced with 1000. The next case, no change here, so again no change here. Here is a difference of 2500 positive, again 2500 positive. Here it is a making of less of 2000, again a less of 2000. So both sides are working against each other in an equitable manner. Nothing is going to make a difference. Whatever transaction happens over here, his total investment in the business would be is equals to the liabilities in the business. That would stay all amount same over here. That won't be changing. So in this manner, his total assets would always be is equals to the total of liabilities and capital. So this is the simplest version. To start with the accounting equation points, you can go for the next particular videos relating to accounting equation. Thank you, Accountitude. Like, share and subscribe.